We're told a story, aren't we? The world's elite, the figures in power, they paint a picture for us. In this picture, every family strives to own their own home. It's presented as the very bedrock of security, the foundation of a dignified life. The prevailing wisdom, the narrative we hear time and again, is that a person without a stable roof over their head can become a problem for society. And so governments all over the world step in, promoting homeownership as a powerful tool to ensure public order and security. Think about how it works. Let's say a family has managed to save $20,000. They have their eyes on a home that costs $100,000. The standard solution is for a bank to loan them the missing $80,000, creating a long-term plan for them to pay it all back. The fundamental idea is to make sure everyone has a place to call their own. It sounds logical, even noble, doesn't it? The narrative that follows often whispers a subtle accusation. If you can't afford a house in this day and age, you must not be working hard enough. After all, with governments and banks supposedly on your side, covering 80% or even 90% of the cost, what more could you possibly ask for? This kind of messaging relentlessly pushes people toward one conclusion. You must desperately scrape together that $20,000 down payment and leap into the housing market at all costs. But have you ever paused to ask a critical question? Do the architects of this system, the ones who designed this entire game, genuinely want to help us afford a home? If their true goal was to make housing accessible for everyone, isn't there a much simpler, more direct solution? If the core problem is that most people can't afford to buy, the most straightforward fix would be to bring the prices down. Instead, we are all encouraged to borrow massive sums of money to chase after these incredibly expensive homes. So doesn't that path guarantee that prices will only continue to climb, pushing the dream of homeownership further and further out of reach for the next generation? And this brings us to a crucial turning point. Right now, the U.S. Federal Reserve has begun cutting interest rates. Financial analysts across the globe are predicting that most other central banks are about to do the same. This means the cost of borrowing money for a house could soon become cheaper than it has been in years. Does this signal that 2025 is the golden opportunity, the absolute best time to buy a house? Or does it mean we need to stop, think, and perhaps do the exact opposite? What if housing prices were on the verge of a collapse? Might we be heading toward a future where we don't even need to borrow money to buy a home? Hello everyone, and welcome to Stewardship Finance Academy. If you've ever played the game of Monopoly, you know the rules. Everyone starts on a level playing field with the exact same amount of money. The objective is brutally simple: systematically transfer everyone else's money into your own pocket by buying up all the land and building as many properties as you can. It doesn't matter how hard the other players work or how diligently they save their money. If they land on a space you own, they are forced to pay you rent. Their hard-earned cash flows directly into your hands. With that rent, you can then buy even more land and build more houses. The next time someone lands on your property, the rent might be double or even triple until you've driven every other player into bankruptcy. Is Monopoly just a harmless board game? Or is it a chilling reflection of our reality? Countless people work tirelessly from dawn until dusk, fighting to earn a living, only to see a huge chunk of their income disappear into the hands of landlords. People who simply own land and houses, seemingly without lifting a finger. Think about the people who build our world, the ones who construct schools, hospitals, shopping malls, and railway lines. Because these vital pieces of infrastructure are often built on land owned by private individuals, the value of that land and the properties on it can instantly multiply. The landowners often reap massive rewards without contributing any additional effort of their own. You might dream of becoming a landlord yourself, but the reality is that saving enough money for a down payment can feel like an impossible climb. Even if you do manage to save, it often feels like housing prices are rising even faster, keeping that dream perpetually just out of reach. Isn't that infuriating? This isn't some new, modern frustration. Early economists looked at this dynamic and were deeply troubled. They argued that it was a system that punished those who actively contributed to the economy while lavishing rewards on those who did nothing but passively benefit from owning land. After all, if the economy is booming, a landlord can simply raise the rent. Whether the business owner renting the space is actually turning a profit or not, if one tenant can't afford the new rent, there will always be others lining up to take their place. And as rents go up, the prices of everything else tend to follow. This begs a fundamental question. If no one feels motivated to work or to spend, what happens to the entire economy? There was a time when governments in Europe and America, heavily influenced by these economic ideas, took action. They imposed massive taxes on landlords and landowners. As a result, a significant portion of the national treasuries came from these collections. In practice, this meant that speculating on real estate and collecting rent wasn't the easy path to immense private wealth it is today. A huge slice of that profit was redirected back to the public. So what if we returned to that model? What if we went back to the economic system that was common before the 1970s, where people earned money, paid it to landlords, who then paid heavy taxes to the government, which in turn reinvested that money back into the people? Wouldn't housing prices finally stabilize, just like back then? We might not be facing the terrifying prospect of working for 20 or 30 years just to own a home. But that old system has all but vanished. Why? Fundamentally, not much in this world requires overly abstract thinking. The real challenge is to meticulously investigate the tangled web of interest groups that operate within these complex systems. If you fail to do that, you risk missing out on critical chances for upward mobility. Even if you manage to strike it rich, you could find yourself right back where you started. Why? Does the death of a whale truly bring life to everything around it? If you want to avoid becoming another casualty of this system, or even learn how to turn its rules to your advantage, I urge you to subscribe to my channel. You won't want to miss the deep dive analyses that are coming. If you're worried you might forget these crucial insights, do me a favor and hit the like button on this video. It will automatically be saved to your playlist so you can come back and watch it anytime. Let's start with this. If the old system protected the interests of the people and the government, whose interests were being sacrificed, the landlords, the capitalists, the aristocracy, according to some analysts, these powerful groups orchestrated a monumental shift. When the dust settled, a series of world-changing events had unfolded. The US dollar was severed from the gold standard, causing investors to dump dollars for gold and sending the dollar's value into a nosedive. This made American goods incredibly expensive around the world. Then, the oil crisis hit, and oil prices quadrupled. The collision of these two events plunged Europe and the United States into a dark period of stagflation, a toxic mix where prices were soaring, but the economy was stuck in a deep recession. To put it simply, nobody was making money, and businesses were on the brink of collapse. People had less money in their pockets, yet the cost of everything was exploding. Imagine a piece of clothing that costs $50 to produce and sells for $100, leaving a $50 profit. But if the dollar's value collapses and the oil crisis triples your costs to $150, you would have to sell that shirt for more than $150 just to break even. But at that price, who would buy it? So even though prices were higher, businesses weren't actually profiting. This crisis was a direct assault on the economic theories of the time. A new argument began to take hold. Look, your governments, listening to those economists, taxed us landlords and capitalists into the ground and gave the money to the people. This is the result. The narrative was flipped on its head. The new story suggested that if governments take most of their taxes from capitalists, then capitalists won't create wealth, and the government's treasury will run dry. Without money, governments can't pay the people, and if people aren't paid, they won't work, trapping society in a downward spiral. Out of the ashes of this crisis, a new economic theory rose to prominence: neoliberalism. At its core, it called for a complete reversal of the old approach. It championed wide-open free markets, massive tax cuts for the wealthy, and minimal government interference. This is often the very first economic concept students learn in their introductory courses. If that sounds complicated, let me make it painfully clear. The argument was that governments should stop taxing the wealthy so heavily, because, as the theory went, money is useless in the hands of ordinary people. It's only when that money flows into the hands of capitalists and landlords, they claimed, that it gets invested, used to build houses and to start businesses. This, in turn, would create jobs and provide salaries for regular people to support their families. With people earning money again, the government could then tax them and, in a strange twist, spend that tax money back on the capitalists. More directly, it was a fundamental rewiring of the tax system. The old model saw governments taxing capitalists to spend on the people. The new model proposed that governments should tax the people and spend that money on capitalists, who would then provide jobs for the people. Given the desperate economic situation at the time, Europe and the United States fully embraced this free market theory. What followed was a period of explosive economic growth, even faster than before, which seemed to prove the new approach was right. This is the world that made games like Monopoly so eerily relevant. Governments largely stopped imposing heavy taxes on landlords. This meant that by hoarding houses and land, one could, in theory, do almost nothing and still grow fantastically wealthy off the labor of others. The world, it seems, was convinced that speculating on real estate and collecting rent shouldn't be heavily taxed. Did this unintentionally light a fire under real estate speculation and send housing prices into the stratosphere? Is this surge in housing prices a good thing or a bad thing? Since the birth of this new economic theory, are skyrocketing prices really just about lower taxes? I would argue that from that moment forward, the fundamental rules of the world and the interest groups pulling the strings were completely transformed. You'll hear some people argue that soaring housing prices are just a simple case of supply and demand. It's not enough land and too many people. The logic is that there's only a finite amount of land. All the available houses have been built, but the population and the number of buyers keep growing. Naturally, when demand is greater than supply, prices go up. It sounds like a perfectly reasonable, almost scientific explanation. So if we follow that logic, wouldn't a falling birth rate, a shrinking population, and less demand automatically lead to falling housing prices? Does that mean if we all just stopped having kids, we could all afford a house? Yes, in theory, if housing demand goes down while supply stays the same, prices should fall. But what if the supply of houses and land also goes down? Take a look at bustling megacities like London and Tokyo. They seem incredibly crowded, as if there's no land left, and the population is bursting at the seams. The reality, however, is that the governments in these places often control vast areas of undeveloped land that could easily be used to build hundreds of thousands of new homes. But that land just sits there, empty. It's like a restaurant owner telling a line of customers who have been waiting for over an hour, "Sorry, we're just too small. We only have so many seats. There's nothing we can do." It sounds perfectly rational, and it makes high housing prices feel like an unavoidable force of nature that you just have to accept. But what if there are dozens of empty private rooms upstairs that are deliberately being kept closed? Why? The reason is quite simple. Since the 1970s, the single biggest driver of rising housing prices hasn't been the cost of concrete or labor. It's the astronomical price of the land itself. In other words, most of the money you spend on a house is for the dirt it sits on, not the structure built on top. This has made selling land the most stable and valuable source of income for many governments. So what would happen if a government decided to sell all of its available land at once? The sudden flood of supply would almost certainly cause land prices to crash. But what if instead the land is released slowly, piece by piece, like squeezing toothpaste from a tube? What if developers are forced to fiercely compete for each small parcel? Wouldn't that make the land seem more valuable? Couldn't it then be sold at a much higher price, giving the government more money to spend? So, even if the demand for housing goes down, the supply of land can also be deliberately choked off. Can developers and builders just refuse to buy land? Can the government just stop selling it? Look at Japan. Despite a plummeting birth rate and a shrinking population, housing prices in Tokyo have continued to climb year after year. Or consider Canada, where vast areas are zoned for low-density housing, allowing only 3-story buildings. In Australia, urban growth boundaries are established to limit housing supply within cities. With the surrounding land designated as protected suburban areas, often under the banner of environmentalism, all of these tactics effectively shrink the supply of land. But here we hit a critical wall. If housing prices keep rising but ordinary people can't afford them and nobody is buying, then prices have to fall. So, how does this game keep going? The key isn't whether prices have gone up. It's whether ordinary people can afford to pay them. The solution that was devised was simple, yet revolutionary. Turn housing into a financial product and make it accessible to everyone through borrowing. How do banks and capital make their money? They take the money we deposit with them and lend it out at a higher interest rate. Lending money to a new startup business, for example, is incredibly risky. If the company fails, the bank loses its money. But what about lending money for a house? Even if you can't pay back the loan, the bank can simply repossess your house and sell it at auction. This realization led financial institutions to engineer a brilliant new product, the mortgage. They lend you money over 30 years to buy a house, guaranteeing that for the next 3 decades, your income will flow steadily into their pockets through monthly payments. It's a remarkably stable, almost zero-risk business that can last for a generation. Even better, this business can be put into a cycle that continuously accelerates. How? First, banks can lower interest rates or reduce down payment requirements, making it easier for people to borrow. As more people borrow, they can afford bigger and more expensive homes, which drives up demand and pushes housing prices even higher. As a result, the houses that are mortgaged with the bank become more valuable. This strengthens the bank's assets and allows them to lend out even more money. With more capital flooding the market, it becomes even easier for people to borrow, leading them to buy more homes, and the cycle repeats. And how do developers and builders get the money to buy land and start construction? They also borrow from banks. The first rule of capital is to use other people's money, not your own. So when a developer borrows money to buy land and build a house, they often don't even have to wait for it to be finished before they sell it. They can pre-sell it. The moment you buy a pre-sale home, the developer can use your down payment to pay for construction, and the loan you took out becomes their profit. The interest you pay on that loan, of course, becomes the bank's profit. So if you look at the entire process, it can seem like the bank hasn't actually invested a single penny, and neither has the developer. Only you, the homebuyer, have potentially drained the savings of 3 generations of your family and chained yourself to a 30-year mortgage. Through the invention of the mortgage, banks essentially made it possible for you to spend 30 years of your future earnings on today's housing prices. Doesn't that create an incredibly powerful engine to ensure prices just keep going up? I see so many debates online about whether it's better to buy or rent, and whether housing prices are going to rise or fall. Honestly, for many people, these conversations are missing the point. Even if prices are rising and buying seems cheaper than renting, what good is that if you don't have the money to buy in the first place? So many people dream of having their own family and their own independence, but as soon as they move out, half their monthly salary can vanish into rent. Living expenses and transportation, leaving just enough to save for one trip a year? Some people believe they can secure their future by cutting back on everything, sacrificing meals and entertainment, only to find that the cost of living keeps inflating while their salary never quite keeps up. Do you know why this is the reality for most people? It's because they have no income outside of their job. They work, but they are primarily making money for other people, never truly for themselves. They tend to think of investing as a dangerous gamble, assuming that because people they know have lost money, they will too. Why is this mindset so common? Because our traditional school system rarely teaches us financial literacy. It's designed to train good employees who work for a boss. But I am here to tell you that investing is a skill that can absolutely be learned. It is replicable and it's practical. What most people need is a mentor with a proven track record of investment success. We don't need to master 1,000 different investment methods. What we need is one consistent winning system. We have spent 3 months unconditionally sharing all of our secrets in a stock investment masterclass. The good news is, this class is currently free. The bad news is, there are a limited number of spots. After they are filled, a fee will apply. If you don't want to miss out, sign up right now by clicking the first link in the video description. With housing prices soaring like this, who are the real winners? If it seems like the government and capitalists are the ones profiting, are ordinary people really the ones being sacrificed? Not always. Do you know people in your own life who have dramatically improved their financial situation by buying a home? For example, someone might have $100,000. They can use that as a down payment on a $1 million house. If that house goes up in value by just 10%, that's a $100,000 gain. You used $100,000 to make $100,000, you've doubled your wealth. In other words, you used a small amount of your own capital, leveraged it through a mortgage, and acquired a financial asset that everyone, from the government to the banks to the entrepreneurs, wants to see go up in value. They might even actively help it appreciate. Could it be that you are an unwitting participant in this very interest group? So, are the interests of those who can't afford a home the only ones truly being sacrificed? Now we arrive at the pivotal question. Does the death of a whale truly bring life to all things? Let's look at Japan's experience. How insane did their housing prices get? It was once said that the value of the land in Tokyo alone was enough to buy the entire United States. Then, through an agreement called the Plaza Accord, the US and other nations took actions that many analysts believe caused Japanese housing prices to be cut in half in just 2 years. Following this crash, a massive amount of Japanese assets were reportedly bought up for pennies on the dollar by foreign investors, including American firms. You can find more details about this in my previous videos. But the most important question is this: when housing prices in Japan crashed, did everyone suddenly become able to afford a home? If people could buy homes without needing mortgages, wouldn't they have more money to spend? If everyone's lives got easier, wouldn't they start having more children? So what was the actual result for Japan? The economy entered what is now known as the lost 3 decades. Young people became deeply disengaged, refusing to have children or even date. Why? Because of deflation. Countless Japanese companies went bankrupt, leading to mass unemployment. If you can't even earn a stable salary, how can you possibly afford a house? How can you spend money? Imagine being a fresh graduate with nothing but passion and your own 2 hands. You can only sell your labor to survive. You want to climb the corporate ladder, but no matter how hard you work, your salary barely budges. Meanwhile, powerful capitalists and financial groups reportedly swept in and bought up countless assets when prices were at rock bottom. As a result, Japan's wealth became even more concentrated in the hands of a tiny elite. In the end, Japan was still playing a version of the monopoly game. When young Japanese people couldn't afford to buy a house, they could only use their salaries to pay rent, and that money eventually flowed right back to the capitalists. Today, virtually every industry in Japan is, to some degree, controlled by a small number of powerful entities. So when housing prices collapse, are the people who couldn't afford a home really the ones who win? The monopoly game of collecting rent and transferring wealth can become even more brutal during a whale fall. Japan paid an incredibly heavy price. Their government, through one administration after another, tried to stabilize housing prices by pumping massive amounts of money into the market, but nothing seemed to work. Only very recently has Japan slowly started to crawl out of its deflationary nightmare. With Japanese housing prices now reportedly hitting record highs once again, have you noticed the pattern? The fate of those who can't afford a house is, in a complex and tragic way, tied to this larger economic machine. The real estate industry fuels so many other parts of our society. Does building a house not require workers? Think about the millions of jobs in renovation, design, materials, and transportation. No one is buying houses. Will those bricklayers and construction workers still have a job? When a huge number of people are unemployed, consumer spending grinds to a halt. Will other industries, which suddenly can't make any money, fare any better? If widespread unemployment means nobody is earning an income, will the people who couldn't afford a house before suddenly be able to? And what about the middle class? their assets will shrink, and their debts could become larger than their assets, leading to mortgage defaults. For most people on this planet, the biggest investment they will ever make is their home. If one person defaults, then two, then thousands, won't the banks be hit with a massive wave of bad debt? This, of course, triggers a major financial crisis for the banks. This intricate web essentially ties the government, the capitalists, the middle class, and the poor all together. A whale's fall in this context could very well mean the death of all things. In other words, with Japan's experience as a terrifying lesson, it is highly likely that unless a government is willing to risk decades of economic ruin, it will always, eventually, find a way to step in and save the market. Look at the 2008 US financial crisis. How badly did the real estate market crash then? American banks had gone into a frenzy, reportedly lending money to people with terrible credit just to get them to buy a home. The market crashed spectacularly. But after the crash, what did the US Federal Reserve do? It began lowering interest rates and implementing quantitative easing, effectively printing money to push housing prices right back up. So, after hearing all of this, are you still eager to play a real-life game of Monopoly? You think it's better to start acquiring houses and land when prices are rising or when they are falling? Leave a comment below and share your thoughts if you truly understand these dynamics. So, my friends, if you want to build lasting wealth, you must first challenge and shatter the old beliefs that are holding you back financially. Your actions are nothing more than a reflection of your beliefs. You have to accept that the financial model or strategy you choose is far more important than how hard you work. No matter what your career is or how you live, hard work is always necessary. But the results of that hard work can be wildly different depending on the game you've chosen to play. A sound framework is more critical than just working harder. If you realize you're heading in the wrong direction, the most important step you can take is to stop and change course. If you want to integrate effective investment strategies, systematically protect your wealth with a firewall and a navigation system, or even if you'd like our team to contact you directly about a personalized plan, I urge you to join our 2025 stock investment class right now, using the first link in the video description. Alright, we are a channel to share free insights on building wealth, entrepreneurial strategies, investment principles, and how to achieve financial freedom. If you don't want to miss out, I strongly encourage you to subscribe to my channel and turn on that notification bell. And please, be generous and share this video with others. I sincerely wish that every one of you who liked this video finds a speedy path to financial freedom. If you have any questions, please leave me a message. If you found even one or two sentences in today's discussion that can help you lead a better life, then I will be truly satisfied. Okay, see you in the next video. Bye.